Nice opportunity to buy against it, and up the price went beautifully. And it was $100. That little buy trade was $100. Yeah. Buyers coming in here, getting a little bit trapped on the uptick here, sure. Possible sell trade into that pin. Possible sell trade into that pin. And obviously the sell that comes in, boom, straight down. Now obviously as we go along this chart, you'll see other things starting to happen. A little seller getting trapped on that candle there. So you're obviously going to try and bid into that candle. Boom, up she goes, stops at break even. Stops at break even, right? Stops at break even. Boom, my goodness, nice. Boom, my goodness, fantastic. And then of course, we get the seller coming in this candle and the book flips. Sellers coming in this candle. The buyer's trapped at the top edge and you're starting to work sell side if you can at 75.10s against that uptick. And down she goes, another $200 sell trade, which is pretty good, right? Nothing. And then all of a sudden, sellers getting trapped in this pin candle here, isn't it? Sellers getting trapped in this pin candle. Do you see it? So what are you going to do? You're going to try and bid into that phase. You're going to bid into that phase, yes? Yes? So what happens next? Boom! Look at that, guys. 74.95 up to 75.60s. That's a pretty good trade, right? That's a pretty good little bit of business coming off that 74.95 print and running up to 75.60s. And you can see that it's dead obvious what the trade is. Dead obvious what the trade is. They're right there, isn't it? Now, this is what Charlie D talks about. This is the concept of the transition. Now, you know, when we talk about that concept, we're talking about Charlie on the floor of the exchanges. And if you go through the narrative of what's happening here, Charlie's on the floor of the exchanges and he's looking at the different colored jackets, okay? So there's Goldman's over there and there's some locals over there. There's some brokers over there. And he's looking at the brokers, and the brokers got an order. So let's assume the blue line is the broker's orders. And let's assume the yellow line is Goldman's, or the locals leaning on Goldman's. But let's just assume it's Goldman since it's gold, okay? So we've got the gold line, which is Goldman's, and we've got the brokers, which are blue. So the brokers are firing in what? Sell orders, right? So the brokers were firing in buy orders, and the price went up very easily. The brokers then started to fire in buy orders, and Goldman sold to them. So what happened in this area here? The price went 5 bid, 6 bid, 7 traded, 10 traded, 15 traded, 16 traded, all those buy orders still coming in, and then it went 16 traded. So there was 16 bid, and suddenly it goes 15 bid, and then it goes 14 bid, 13 traded, and then it goes all the way down to 10 bid. 9 traded, 8 traded, 7 sellers, 6 sellers, and all of a sudden the price starts coming down. We've got trapped buyers now, haven't we? So we've had a transition sell here and the price drops. So when the price drops, we start seeing this trade coming in here. It's 75 bid. Sellers come in, and sellers pay 2s, sellers sell at 1s, sellers sell at 0s, and sellers take the price down to 96s. But obviously there's sellers coming in, but the Goldmans are buying that 96s. So it's 96 traded, 97 bid, 98 bids, 99 buyers. And then all of a sudden the sellers try again and they say, okay, 75 offered. 75 offered, they hit the bid, 74.99, 74.98, 74.97s, 74.96s, and Goldmans are saying, I'll buy it at 96s, I'll buy it at 95s, I'll buy it at 94s, and then the price starts rising, and what does Goldman's do? They keep buying it on the pin. Goldman's kept buying on the pin, didn't they? Because there's the pin, and there's the orange line going up, or the yellow line going up, so Goldman's are still buying on the pin. So all of a sudden the price goes 95 bid, 96 traded, 97 buyers, 98 buyers, 99 buyers, and all of a sudden we go 75 evens traded. There hasn't actually been a buyer in there, has there? And yet the price has managed to go higher. without a single buyer. Price has gone higher without a single buyer. So obviously Goldman's must be moving the price lines up. And all of a sudden, the buyers pour in. So it goes 75 evens traded. Buyers 75.5, buyers 75.10, buyers 75.15, buyers 20, 25.30, 35.40, 45.50. And the auction explodes into life. And suddenly Goldman's that bought this area here at 75 offered and below. So Goldman's that bought all of those sales below that 75 evens just made $550 a contract on that, literally inside of that 60-second period. It's kind of crazy, isn't it? It's kind of a little bit crazy, do you agree? But this is floor trading, isn't it? This is exactly what you see on the floor. If a seller comes in and sells 10 at a price of 99, the price should trade 98, right? Somebody comes in and sells 10 at 98, the price should trade 97s. Seller comes in and trades 97s, the price should trade 96s. Seller comes in at 10 contracts at 96s, and the price trades 97s. The local goes, wait a second, so a seller of 10 came in and the price went from 96 to 97. How the hell did that happen? Seller comes in and sells 97 and it trades 98. How did that happen? Seller comes in and sells 10 and at 98 and the trade trades 99. How did that happen? It's all sell side deltas, right? But somebody's buying immediately those offers. Somebody's selling immediately into that sell, buying immediately from that seller, but they're adding bids immediately back on the uptick again and giving them a tick better offer in terms of the sell price. And the seller says, brilliant, I'm selling again. But they're getting trapped. They're getting trapped and they can't get out because they love the trade too much, baby. Why can't they see what the trade is doing to me? Because they're stuck. It's a little bit of suspicious minds going on in that trade, isn't there? We can start to recognize a little bit of suspicious minds because the sellers are now looking at it saying, we can't go on like this. You know, we can't go on together with this bottom edge. The sellers have obviously got suspicious of the buyer coming in and bidding and holding. And then the takeaway from that trade is just absolutely spectacular. Goldman's got them. Absolutely hook, line, and sinker. And what a wonderful, wonderful trade to the upside, isn't it? Absolutely brutal, absolutely brilliant. That's the way you want to make a buck. Now, this is systematic floor trading. Now, it sounds as if you can't really put those two words in the same sentence, systematic floor trading, but we're just calling it floor trading because this is exactly what the floor traders are seeing. This is all the floor traders are really seeing outside of the big board. The floor traders are seeing the yellow vests buying this one and they're seeing the blue vests buying the other one, selling the other one. And when they see the yellow vests buying and the blue vests selling, there's a systems trade there for a local to jump into the yellow vest buy trade. And that's exactly what happened with that 58 lot. So they bid into that 58 sell, and then the sellers came in. So sellers came in, got jammed, and then the market went bid, and the price went up. Price went up. So this is systematic trading from a floor perspective. And the reason why we call it systematic is because that's what a lot of floor traders simply used. Charlie D tells you this himself. It's not me that's telling you. Charlie D tells you this himself. Charlie D said he waited for that absorption. He sees the big boys. He called them the big dogs, remember? So he saw the big dogs coming in and bidding, in this case, 95, 96, 97. Sellers at 97s, bidding 97s, traded 98s. The sellers are like, whoa, wait a second. Charlie says, bid 98s, bid 97s. 98s bid, 99s bid, 99 bid, 99 handle bid. And then all of a sudden the market breaks. And we get the rip away from that absorption. Systematic selling, systematic buying is visible on an order flow chart. So as you catch up to the right-hand side, can you see any trade opportunities using systematic trade entries? Sure. The buyers came in here and Goldman sold against them, didn't they? So the buyers came in this little candle here and Goldman sold against them, didn't they? So the buyers came in, got trapped there, Goldman sold against them, and then all of a sudden the buyers were like, okay, I don't know what's happening. They sold here, Goldman's bought against them, and then the price did break. Okay, fair enough. Goldman's got a little bit upside down themselves on that occasion, but obviously if that was a loss, it was a loss. 3 ticks, 4 ticks, whatever, and the price drops. Now they're selling again, so you can see that they're selling again into these upticks, and you're saying to yourself, okay, sell it. You join the sell. Remember, you're not selling bottom candles, you're selling the top of the candles. And obviously, if you sell the top of the candles, you're selling around about 31s, 30s, trades a low price there at 21s, 20s. Sellers come in line, buyers come in line, buyers come in line, sellers come in line. Looks like Goldman's still preferring the press to the downside. And obviously what we're looking for is for this delta buyer to sweep higher, try and take the price higher, get jammed into higher prices, and then Goldman's might work the offer back against that buyer. So a little quiet phase at the moment as we came into obviously the NYMEX Open. Of course, trying to get positioned for the NYMEX Open is always a great trade for these systems traders because you know you're going to get a volatility expansion at the NYMEX Open, correct? And that's exactly what happened here. We finally got the volatility expansion. So the big boys, the big dogs, that's one of their biggest trades at the Open each time, right? They're always going to be looking for that trade at the Open. So we'll see if they do the same thing on the S&P, of course. We'll watch for that on the S&P, but you get the basic idea. There is some very big money to be made by processing this little piece of information. It works out the same on your gold market if you were trading gold. It gives you some really nice clues. It gives you some really nice ideas about the gold trade if you're wanting to try and trade those ideas. Then, of course, gold and oil are usually the best two markets to use these ideas inside of. And as I said, some of them incredibly obvious because you can always tell when the market's getting too far because Goldman starts selling to them. Take a look at gold here. You can see where the market went bullish. So you can see Goldman's went bullish into the low price. Sellers came in, Goldman's bought from them. Okay, so you got the buyer down at the bottom edges there. Goldman's obviously went for a bear raid, never worked. Everybody went bid at the same time. Everybody went bid at the same time. And you can see what happened in here. Goldman's started to buy from the sellers at the higher prices now. And you can see what happened in here. Goldman's bought from those sellers at those higher prices still. And obviously those sellers are now getting trapped. And Goldman's is taking the market bid aggressively. Those sellers are now really, really struggling. And obviously the sellers puke. And all of a sudden we get this big rip higher. And Goldman's joins in for some of it, but not a lot of it. Now you can see what happened in here. If we just go to that little phase there, you'll see exactly what happened in here. Goldman's went bid off the low price. Sellers finally came in at the low price. Goldman's was buying from the sellers in there. You can see the pins coming in as Goldman's bought the bid. They didn't just buy the bid, they lifted the offer with their trade, didn't they? They started to lift the offer. Now they were lifting the offer not by actually physically lifting the offer. They were lifting the offer by pulling away their offers and stacking their bids. So they started to stack the bid side of the book against those sellers, and obviously that means that there's going to be an expected upside breaker here. And the breaker really was quite good off that 79 print. Nice profit, right? Nice profit. Sellers still trying to take the market south. Goldman's still trying to hold them in these downticks at the moment. You can see that there was a nice opportunity to buy into that little phase. The Goldman's went bid behind it, so there was a nice opportunity to buy into that little phase. And it's just kind of, that's what's happening just now. So they're obviously trying to get a pump and dump at the top edges now. The best type of trade for you guys is to see the opposite of this, is to see the buyers getting trapped at higher prices and then sell to them, because this doesn't necessarily mean Goldman's are bullish. What Goldman's are maybe trying to do in this type of trade, or the commercials or the market makers, is to try and get a pump and dump, to try and bring some buyers into the highs to sell to them. At the moment, the sellers just they're not buying into this. They're not buying into that story just yet. So I don't like this scenario at top edges. I like this type of scenario at bottom edges. That makes life very, very easy. Like this bottom edge here. That's the kind of easy bottom edge that I like. that's the kind of trade that makes a lot of sense to me. This type of top edge, yeah, it's kind of ugly because it's all gameplay now at the moment, isn't it? It's all about the game. So that's a little bit of a problem child at the moment on gold. I'm not madly keen on those stories. But again, it's like what I said to Stefan about the Prem this morning. The Prem's all about spending time looking at it and reading it, isn't it? It's about spending time trying to make sure you understand what it's telling you. Because Prem's Prem. I mean, order flow is order flow. There's size differences. There's a lot of different things that you've got to try and take into consideration when you're looking at things like the Prem and order flow. You just have to get used to it.